The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, just a monster corn yield estimate out from the USDA on Tuesday with the August World Agricultural Supply and Demand Estimates report predicting a national average corn yield at 188.8 bushels per acre. Soybean yield up slightly to 53.6. There was a lot of changes to harvested area and more with these balance sheets. Let's talk about this and try to put all this in perspective as best as we can. Tyler Schau with agmarket.net joins us here for today's market talk. And Tyler, I'm catching my breath from trying to go through all these numbers, and I'm sure you're doing the same. What a print from USDA with the corn number, especially, Tyler.
Yeah, it was you had to do a double take. Number one, first I had to do a few pre-report interviews, and they asked what everyone was going to be looking for, and I said, well, most likely the headline number is going to be yields, and obviously that was a whoa moment. Not only did they come in high, they came in higher than the highest level of any analyst expectations, and a reminder that a lot of analysts got mocked for coming out with some of those high expectations on yields. So I hate to see the blowback we're going to see over the next few days on this one. The second take that I think you've kind of did in the corn was all of a sudden you glanced and you looked at the production and the math didn't add up. No one was talking about an increase to acres, and we saw about a 1.9 million acre increase, I believe, in corn harvested area over what we saw in the report in July. So you take those two alone, you just increase production by 1 billion bushels. And I think if there's one more kind of takeaway from today, it's that we increased production by 1 billion bushels on the August WASDE, and corn was only down 12, 13 cents at the end of the day.
Yeah, it could have been worse on the close, I guess is how I would put it. And as we look at some of these numbers on the video feed, and this was from your colleague Jim McCormick there at agmarket.net. He had this on X. But to that point, corn only being down 12, 13 cents. Yeah, that's not great. But it feels like the market was factoring in this high yield print coming from USDA. It's almost like we've been pricing this in and we've kind of expected something in the high 180s here, Tyler.
It does. I think we didn't take into account just the level that the market had priced in on a yield perspective. The other thing to take a step back and look at is the ending stocks down there on the new report was 2.1 billion bushels. If you think back to last year on the August report, we got a very similar ending stocks, 2.1 billion bushels. And look over there on the second column from the left or in the middle, that's your old crop ending stocks. So in the August report last year, we had a 2.1 billion bushel estimated carryout, and now here we are in August of 25 and we're at 1.3 billion bushels. So we trimmed that carryout down last year's. Now I will argue that that's going to be more difficult this year because you're looking at some lofty demand levels for the new crop that the USDA is coming in. You just look at 2.8 billion bushels, 2.875 billion bushels of exports, 5.6 billion bushels for ethanol. So that's a lofty usage number that we've got to achieve. So it'll be interesting to see what happens as we move forward and keep rolling this thing out through the calendar.
And that's a great point. I think that was another area a lot of folks were expecting some adjustments was on the demand side and the exports and how were they going to bake this cake, so to speak. And, corn exports have been very strong, pre-start of the marketing year here, September 1, but now with some changes and tweaks and this big yield, to your point, I'm going to be very curious, if we do actually achieve this yield on a national average level. And we'll never truly know the final number. We never do. It's always a guesstimate. Yield monitors will roll this fall. We'll get some ideas from that, and we'll have a pretty close idea. But, one has to wonder, do we end up finishing this crop off and achieving that number? And then what happens, to your point, on the demand side? Those are some big question marks for me here, I think, moving forward, Tyler.
Yeah, and I think that's going to be the struggle when we look at corn as we move forward. Is if we do see reductions in yield as we move into the fall and the combines roll, and we get some of that yield data coming in and more accurate reports from the farm and so on and so forth. There's going to be some fat that the the USDA can trim on that demand side. So okay, we pull that yield number down. That doesn't necessarily mean it's a bushel for bushel gain or loss on the carryout. They'll likely come in and they'll cut some of the exports. They'll cut some of the demand for ethanol, and the result is, I led off by saying, don't forget last year we were at 2.1 billion bushels on the August WASDE, and that came down. So I mean that's my reasoning for looking at the corn price and saying, okay, we're only down 13 cents, because it's very likely as we move forward that yield number does pull back a little bit.
Yeah.
The struggle we're going to have though is I just don't see how you. I mean, I don't see those demand numbers continuing to increase like they did last year. We came off a high price years in 21, 22, and part of 23, and that kind of helped curb demand a little bit. We got a lot of that demand back in the last year. The good news, if you want to look at it that way, coming into the day, we were already the cheapest corn in the world. So I think for the time being, that keeps a little bit of a bid under this market, and that's probably the ultimate reason why we did see corn only down 13 cents, as buyers know that, hey, it's already the cheapest here, so it's hard to get too much more competitive when you're already the cheapest game in town.
Very true. Very true. Soybean side, that yield number up about a bushel, 1.1 bushels per acre. The production number, 4.292 million. Um, when you look at the soybean side of this equation and the balance sheet here, I have to wonder, and as I'm looking at more of these numbers, is that soybean number getting a little tight, a little too snug for comfort here, Tyler?
Um, you know, it is tight. So domestically, it's very tight. We're at a just slightly below 300 million bushel carryout. They came in and, for lowering or increasing corn acres by 1.9 million acres, they decreased, I think, beans by a shade over 2 million acres. There's so many millions and billions and numbers and all this that I got to try to keep square in my head. So I apologize. But they went and decreased the soybean acres for harvest, and that more than offset that increase in the yield. They also came in, lowered some of the export numbers for soybeans, which I think until we see some China business is also well warranted. What I think it does for soybeans is, if you look at, I think it's more important to look at the world numbers when you're looking at soybeans, and the world ending stocks did come down for the 25-26. They had 126 million metric tons. They lowered that to just below 125. So they pulled it down a million metric tons. Not earth shattering because we've been building that up over the last few years. But I think what it does open the door for is South America's got to have a good growing season as we move into this fall. If they have some hiccups, they've had massive crops the last couple of years, back to back to back. They continue to increase acres. If they get another really good weather window and they produce a good crop, I don't think you've got a lot of story for beans pushing higher. But if they have a drought, any type of growing issues, now that opens the door for beans to do a little work on the price side of stuff.
Wheat, I know that number, not many changes there. We did come up slightly to 52.7 bushels per acre on the all wheat forecast. The production number was up, I believe, a little bit. Again, I'm trying to keep all the numbers straight here myself. Actually, down from July. Excuse me, 1.927 billion. Your thoughts on the wheat numbers, Tyler?
Wheat was it wasn't really a big game changer, and that's why I think you saw, I think your Chicago and Kansas City varieties just kind of followed corn today. They ended up closing down a dime or so, kind of across the board. Spring wheat is one where we saw some cuts to production. All of them saw some increases to demand. We pulled that carryout down. I think it was 890 on the previous report. It's down to like 870. So that helps. We pulled 20 million bushels of ending stocks off. I mean, at the end of the day, when you're coming in with ending stocks 870 million on wheat, that's a pretty big stocks to use number. I haven't done the math on it today, but it's over 40%, which is not bullish or friendly to the wheat market. So you just kind of saw a muted reaction. The one thing I did think, as we closed the day, spring wheat kind of held in there pretty decent. So that's one of the positives, especially for our growers we're at. It's a little harder to tease some of that data out, and I'll be fully honest, just haven't had time to dig into all the stuff that comes out of NASS on top of that to look at spring wheat yields and estimates and all that kind of stuff.
Yeah, there's a lot of numbers in there, and I think traders and farmers and analysts we're all going to be reacting to these numbers really over the next several days and combing through the fine print and the details here. But again, just a lot of numbers to take in here. Tyler, one more thought on the grains before we talk livestock. Just in general, as we digest these numbers, risk management, getting the pencil out, sharpening things up. Producers might be forced to move some grain to town here that they can't store, things of that nature. From a risk management standpoint, do these numbers, do any of them change your mindset here on the risk management side?
No, I mean we've been we've been pretty adamant working with our producers to, especially on bushels that you can't store, to have a plan on those. I mean, if you take those numbers that we got from the USDA today to heart, and I remind everyone, like, you can be mad at the USDA and think it's too high. I mean, my general opinion is, I mean, this is going to sound kind of crass from a guy who's supposed to be a market analyst. I don't really care what the numbers are. The numbers are what they are, and I can't change them. So I just got to go with the flow and what the market's telling us. I think the market's telling us, as right now, it's a big crop. Yeah. So how big? I don't really care. I just know that it's a big crop. There's going to be a lot of bushels that are going to have to find a home at harvest time, and I don't want to be a producer that doesn't have a home for them, if that makes any sense. So if you've got bushels you can't store that have got to go to town, you got to free up cash. Now's the time to be going out trying to find that home for them, negotiate some type of a basis deal. My guess is in most areas, not all, I don't like painting with a big broad brush, but most areas are going to see some harvest basis struggles and even more weakening when this crop does come off and it starts flowing to town. So the job right now is to figure out what you're going to do with those, make that plan. And then, the other thing is there's a lot of ways to re-own that crop for future rallies. And I don't get into too many specifics, but cheaper than you can pay a commercial to store it for you. So, and I'm guessing, we're hearing commercial storage rates going to be in that 7 to 10 cent range. That's also very dependent geographically, but you start chewing up a lot of sense if you put grain on commercial storage for a few months trying to figure out what you're going to do with it. And oh, by the way, you never really did anything for risk management. So you're incurring costs and not protecting the downside. So we feel there's a lot better ways to protect that downside, get it sold, and re-own that with for less than the cost of storage for a few months.
I want to make sure we talk about cattle here too today because I don't want this to get lost, but we were up 5 and change in feeder cattle on Tuesday, and we were up 2 to 3 in fat cattle. A really strong day to the upside on the futures there in both cattle complexes, Tyler.
Yeah, and don't forget Friday we were limit down, and everyone was worried the world was coming crashing down. The cattle market's at that spot where, we're at record prices, so it's really hard to have an idea of where prices are going to be when you're already at prices you've never seen before, right? It's hard to judge what is a fair price. We know the fundamentals aren't changing. We know cattle numbers are tight. And, if you just do some simple math, you can see at a fat board of 230, 232, an extremely cheap cost of gain. Most of those numbers are coming in around $1 a pound cost of gain. And the WASDE numbers we got today told us feed isn't going to get much more expensive in the near future. It's just the recipe that these cattle markets are going to stay strong. And I feel as long as the fat prices stay elevated, that's going to support, and the feed prices stay under pressure, that's going to support both fat cattle price, the feeder calf price, and I wouldn't be surprised if we don't continue to see the trend where we put in higher prices and kind of outpace where everyone thinks we could get to. And then we have a sell-off. And the one thing I reminded everyone on Friday, we were down $9.25 on feeders. If you did a percentage move of the value of the contract, that's equivalent to a 10-cent move in corn, where corn is trading at that day. So, not saying it was nothing; it's a big deal, but you've got to look at the total value of the contract, and they're just worth a lot of money.
Anything final? I know busy day, and again, a lot of numbers and more for folks to go through over the next several days and watch these markets. Anything final you'd add or reiterate for folks today, Tyler?
I just, like I said, I think that the fact that we saw that big of an increase in production and a 13-cent decrease in prices, it could have been a lot worse. Like, I'm really kind of surprised it wasn't a lot worse, which tells me two things. One, this market does feel a little bit supported. So if we do get some rallies, I think you've got to be a willing participant in selling some of that and trying to figure out a way to manage some of that upside risk if you're worried about prices going higher. I just feel like maybe we've taken some of that out of our ability to push considerably higher. Like I said, any cut in yield as we move forward is most likely going to be offset by cuts to demand, because it's a lot of corn to try to ship out on top of a big corn crop coming out of South America, from what we're hearing from analysts down there.
Yeah, good stuff as always. And I know if folks want to reach out, talk with you, others on the team there at agmarket.net, have a conversation just about their risk management and more. I know a lot of ways to get in touch, right, Tyler?
Yeah, look, the simplest, look us up on the internet, agmarket.net, and check us out.
You can find more details on the website, agmarket.net. Tyler Schau, always good to hear from you. Thanks for joining us for a busy WASDE recap, and we'll talk to you again real soon.
You bet. Take care, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.